Good afternoon. It is Monday, July 22nd, 2024. It's just after noon, 12 Eastern. And this is Rob Sin at CEO Technician on X, at Goldfinger on CO.CA, and this is Goldfinger Capital on YouTube. Another week of political chaos and some market chaos, actually. The markets are picking up in terms of volatility, and I have a feeling that things are going to continue to get more volatile over the coming weeks and maybe even for the rest of the year. Um, Before we begin, as usual, if you enjoy my content, if you get value from this video, please hit the like and subscribe button. I make these videos every week, put out a lot of other content. Some of it is completely free, and some of it is premium. You'll find it on my Substack, Goldfinger Capital. And yeah, thanks for tuning in again. Birthday weekend, and here we are on a Monday with some pretty good market action. I mean, the junior sector, the junior mining sector is pretty sleepy. We're definitely in summer doldrums, but there's other sectors that are moving, um, and definitely the S&Ps are moving. So we're going to get into it here today. So the stock market correction sort of began last week. Um, Wednesday, Thursday, Friday, all down days for the S&P, but that comes after a rip roaring last 7 weeks. I mean, from the end of May till early last week, basically a week ago, that was a tremendous run in the stock market. And we got this breakout, this powerful breakout in the IWM small caps 2 weeks ago that continued up until, I guess, Wednesday morning, last Wednesday morning. So really, I mean, I don't think this is too surprising that we saw basically a 3% pullback in the S&P. Stocks like Nvidia have definitely had bigger drops, 10% plus, but Nvidia also doubled in the span of 2 months from April to its June high, basically was almost a double. So seems pretty standard to me. I want to get really bearish and doomsday here, um, and we can craft a narrative, certainly a doomsday narrative, like people have been crafting for months and for years. But just based upon technical analysis, um, I'd rather be a buyer than a seller. Okay, I'm just going to put it bluntly. I'd rather be a buyer than a seller. I do think, like with the S&P, certainly we could have some more downside, maybe down to 5,500, later this week. But here this morning, I was really impressed. I kind of expected a failure around 55.85 this morning. Certainly 5,600. Now we haven't cleared 5,600 officially yet, but we got above it, spiked back under it. There's been some whipsawing so far the first 3 hours of today's session, but we're back above that purple line that I drew 55.85. And you can see I drew this little fan, um, where we're breaking this downtrend, essentially. Um, Now, I would say we need above 56.08 to really say, okay, all systems go. Correction is over. It's not even a correction. It's a 3% pullback. Um, but right now, I would say, man, the bulls have stepped up again. It's just another bear trap. It looks like here, until proven otherwise. And even with a stock like Nvidia, um, look, definitely a lower high as we discussed last week. There's a lot of red candlesticks recently, but still, you have to respect the trend. And price is still above a rising 50-day moving average. So if you're a real technician trend follower, you can't get too bearish. Certainly you can take tactical short trade setups, really, super near term day trade setups. But, from a daily chart perspective, so we're talking a little bit longer time frame, this looks like a correction that I would lean towards being a buyer of. And, we can craft narratives all different ways, but I think the simplest narrative is either candidate, so whether it's Trump or Harris or who knows, they're going to be very stimulative on the fiscal side. They're going to pressure the Fed to cut rates. They're going to continue to increase the public debt, um, increase the fiscal deficit, right? There's no plan for that to stop. And I don't see a way that we're not going to have a pretty protracted Fed easing cycle, kicking off here within 2 months, okay, in September. And you can see this graphic that I've put up here. So this basically is telling us, just based upon the Taylor rule, the balanced approach, whichever one you want to use, the Fed is way too tight up here, way too tight. Um, Based upon inflation, based upon the strength of the economy, and now we're seeing the unemployment rate tick up, and it's not just a one-off tick higher in the unemployment rate. This is now a little bit of an emerging trend. And with CPI basically back down to 2.5%, and now the unemployment rate ticking up above 4% to 4.1%, yeah, the Fed needs to get going on the rate cuts. And basically, this chart, this graphic is telling us that the Fed needs to cut 200 basis points by the end of 2025. There's a chance that they could do it a little faster than that. They might get down to 3.5% earlier in 2025, not at the very end of the year. But whatever, the Fed is too tight, and there's a lot of easing coming. And we could get really carried away where, okay, so we're going to have a steepening yield curve. So the Fed is going to move the front end down under 4% very quickly. What happens to the long end? Will the 10-year move up um, a bit? It might not even fall that much. It might stay around 4.25. It might move up to 5% because of inflationary pressures of Trump 2.0. There's lots, and even if the Democrats win, they're probably going to be doing a lot of spending, right? So you can make a case for inflation moving back up again, sort of making a U-turn from down around 2%, probably going to, reach a trough here in the next few months, and then it will U-turn back up again in 2025. Um, yeah. So there's a lot of different, narratives um, that one can make here, but in a rising inflation, very stimulative, economy where you have both fiscal and monetary policy stimulating, you want to own stocks. You want to own stocks. You want to own gold. I don't really want to talk about politics much, but I think that it is worth noting that basically, I think Biden held out as long as he could, and I think the polling that came out on Saturday over the weekend was so bad that he couldn't stay in anymore. So I think he held out as long as he possibly could. He tried to hold out, but the pressure was too strong, and it was clear that he was a lame duck. Um, I think that, well, so Trump has a real opponent now, but I don't think she's a strong opponent. We will see who the VP is, but I don't think she's a strong opponent. And I think we have to prepare, whether you're a Democrat, whether you're a liberal, whether you're conservative, doesn't matter. Just from an investment standpoint, I think we need to be thinking about Trump 2.0 and the potential even for a Republican sweep in November, right? And the idea of a second Trump presidency would be a lot of tariffs on China, and actually there's bipartisan support against China for for the imposing of more tariffs. So that's coming. That's government control on the free market, um, and very likely with an easing Fed with very high fiscal deficits and no solution in sight. That's not a focus of either party right now. Like reining in the deficits is not a focus of either party. So the dollar could really take a hit, and we could have the prospect of something similar to the economy we saw in the 70s with government controls on prices across the economy. The Fed might have to implement yield curve control. As I said, if we have that steepening yield curve and the long end starts to become unanchored, starts to move up, the Fed might just have to hold it at a certain level. So we'll have the prospect of both cutting the Fed funds rate and debt monetization through yield curve control at the long end of the curve. This is getting a little bit wonkish, but this is important because in this scenario, this is the mega bull case for gold. I mean, like this is if we get Fed cutting and implementing full yield curve control while the federal government is deficit spending out the wazoo. That's the scenario where you get $3,000+ gold. You might even get $4,000 gold. Now, I don't want to make a forecast of that, um, but that's possible. That's the kind of thing that could happen. And quite frankly, it could happen pretty quickly. I mean, it could happen next year. Things. So there's this JP Morgan. So we're moving up on the S&Ps again. I think it's just tough to be too bearish here. Um, this is JP Morgan note that's very good. Came out over the weekend or Friday. Um, Goes through a bunch of important things, but you know, this is the key bullet points for me are kind of like um, 6 and 7. Gold stands out as a winner. A winner. Just fiscal deficit concerns only grow bigger in Trump 2.0. We'll continue to see reserve diversification by China, by India, by Saudi Arabia, by smaller central banks, more de-dollarization. Trump is America first, right? Trump is saying like, I mean, America's not necessarily your friend. America's not there to be there for your security. Um, you got to pay us for for security, and he's definitely pro-inflationary. I would have to say that he's pro-inflationary, and especially if there becomes a trade war, you're going to see sort of cost push inflation across the economy. And then the geopolitical risk. I mean, that's not going away. It's not, regardless of what his speeches say, he can't just um, snap his fingers and Ukraine and Russia sign a peace deal. It's just not happening like that, right? And then the Middle East, Trump is very pro-Israel. Trump is very much against, Iran. Um, Saudi Arabia is a bit of a wild card right here, right? And then you have the Houthis in Yemen, and I could go on and on, right? The geopolitical risk is not going anywhere, regardless of whether it's Harris, Trump, or a third candidate. Okay, it's just not going anywhere. And quite frankly, if it's a Republican sweep, that would be potentially inflaming the Middle East. Um, Definitely something that we have to think about. And I agree. A Trump victory with a Republican sweep will lead to higher yields and steeper curves. So there'll be Fed pressing down on the Fed funds rate, the front end of the curve. And I think higher inflation and very pro growth stimulative policies on the fiscal side would lead to a booming economy and much higher inflation. Okay, that's how I see it, and I'm totally open to being wrong about that. But I think um, you want to own gold, right? There's a lot of similarities to the Nixon shock of the early 70s that got the U.S. off the gold, and so the U.S. got off the gold standard, and there were all kinds of government interventions into the economy, including price controls and tariffs. And gold had its best decade in history during the 70s. I mean, it literally went from $35 an ounce at the start of the decade to over $800 an ounce by the end of the decade. So that was an incredible run. Talked about this, and just if you need to just simplify the case for gold, it's this chart. It's just that the debt is not generating the same kind of growth, the same kind of stimulus in the economy. Every new dollar of debt only generates 58 cents of GDP growth, 58 cents for every dollar of debt, right? So this is what happens when the debt levels become too large, right? And a lot of it is debt service payments. Our debt service payments are astronomical, over $1 trillion a year just on the interest alone, right? You can't stop spending, right? If we went to austerity, the economy would go into a deep recession. So it's just inflation and currency devaluation. The dollar, the purchasing power of currency becomes worth less over time. Gold is that bastion of stability, of preservation of purchasing power, right? Tried and true, tested over thousands of years, and it still stands tall as truth, as value, a store of value, a proven store of value, right? So that's the simple case for gold. And gold's going to go up and down 50, $100 every few days, every week. Volatility is going to happen, but you know, let's look long term here. What's the trend? What's the trend? Right? Um, okay, so the gold reversal last week. So let's talk about that. Get these S&P charts out of the way. The IWM breakout, by the way, that small cap breakout is still very much for real. Financials broke out as well. This is just a pullback. This is a garden variety pullback in the context of a breakout. Oh, before we get to gold, I want to say OIH continues to be, so these are two of the best Trump trades for me, is OIH, the oil services ETF. Just buy dips in this, and then Schlumberger. Okay, Schlumberger, big multinational services company in the energy sector. Um, Shoulder, double bottom, right shoulder, right. So you can draw the pretty picture on the chart, and it's breaking out from that big bottoming pattern. And obviously, the $43 level is big support. I read a couple of analysts, reports with targets above $60 a share. Yeah, I mean, this is not one that you're going to double your money on, right? If you make 15 to 20% over 12 months, you've done well. This is a big cap. I think it's a 70 billion market cap. Pays a 2.1% dividend, so you get that. Um, but this is definitely a Trump trade to have on your radar, and I think to be a buyer of on pullbacks. Treasury yields just a little mean reversion after a pretty significant down move since April. I mean, we were above 4.7% on the 10-year in April. We got down to 4.14% last week, just a little bit of a mean reversion. Um, don't think anything changes here, and probably we will be under 4% by the election, and then there'll be a tremendous opportunity to go short treasuries at some point late in the year, and then we'll have that steepening yield curve, uh, much steeper yield curve in 2025, right? I said a lot there. It's a little much, but you can rewind it. um, okay, gold breakout, failed breakout. Um, this is what gold does, guys. Just this is what gold does. It gets everybody thinking one way. Everybody's bullish at 24.80, and then wham, drops it $100 an ounce in a couple days. I mean, this is what gold does. You just have to know that. You never chase a breakout in gold or silver for that matter. You don't chase breakouts. That's not how you trade these markets. Right? That's my secret. You never chase a breakout in gold or silver. You buy the blood in gold and silver. The blood, kind of like now. Kind of like now. Um, I don't think all is lost. I don't think this is the end of the world. I don't think this is the failed breakout to end all breakouts. Um, we do need to be mindful of this 2400 level on a monthly closing basis. Obviously, if we print another candlestick with a big upper wick like we did back in April and May, that's not going to be good, right? 3 failures at 2400 over the span of 4 months, that's not going to be good. Um, but it's also not the end of the world either, okay? I would love to see support hold at 2375 area and then a move back above 2400 by the end of the month, which is 8 days from now. Um, yeah. And I wouldn't be surprised to see that happen. I wouldn't be surprised to see us go even lower near term, so maybe down to 2375 or even into the 2360s, and then a U-turn back above 2400. Okay, the fundamentals do not indicate to me that this is consistent with a major top in gold. The sentiment doesn't either. Yes, I think people got a little excited last week at 2480, but it was still not characteristic of a blow off top. And the price action wasn't even characteristic of a blow off top. Okay, it was just a trap. It was a bull trap. Gold loves to trap on both sides. Gold markets trapping constantly. So yeah, no, I'm not terribly concerned. We have Newmont earnings, the biggest gold producer in the world, reports Wednesday afternoon. And I've heard some people saying this is going to be a blowout quarter from Newmont. Gold price has been so high in Q2. Newmont's going to just have knockout numbers. I don't know what Newmont's going to report. I have no idea. I don't think anybody does. It's that big of a company that with so many different mining operations, I don't think you could get a good handle on it unless you're the CEO, and maybe he doesn't even have a good handle on it, quite frankly. But if I have to make a prognostication, this is what it's going to be. I bet Newmont disappoints with their earnings on Wednesday, true to form. And we come back down to this big support at $43 a share. And that will be a buy, right? Because the market is going to be forward looking here. There might be some disappointment. There might be some selling on the news because maybe expectations are a little too high on Newmont right now. The company has not consistently demonstrated it can perform in a long time. Okay, it's a serial disappointer. So that being said, they might be turning the corner. They might be turning things around here after the acquisition of Newcrest last year. They may be finally getting these operations fine-tuned and streamlined. It's a big company and things don't happen fast. Things don't happen fast. You don't turn the aircraft carrier around in 3 months. Okay. So that's what I would anticipate. And I would like to be a buyer on an earnings disappointment in Newmont because I'm bullish on gold, and this is the gold stock, right? This is the biggest gold producer in the world. So those are my thoughts on Newmont earnings on Wednesday. I believe they come out after market close. So copper correction. Where's my copper chart? What happened to my copper chart? Huh, okay. Anyway, I don't need to show the copper chart. It looks like copper is going down to $4 a pound. And whatever is going on in China is the culprit. I don't think there's any other culprit here. I think it's China, China, China. China was a big buyer for several months of 2024. Now they've turned seller, evidently. Huge exports flooding the market, it seems like. But I don't understand China. I just know that it's clear the Chinese economy, just based upon the most recent data, the Chinese economy is weak. It's softer than expected. We had more easing by the central bank last night in China. Clearly, they've got a housing bubble of gargantuan proportions. There's an overhang of supply they can't seem to work through. Um, so China is China was part of what drove copper above $5 a pound in May, and now China is clearly a big part of the reason why it looks like it's heading back to $4 a pound. That being said, I don't think anything changes in the long term here. You got short-term volatility. There's trading opportunities here if you can be nimble and see this market short term. But bigger picture, I think it's a buy at $4 a pound. And just frankly, I think this copper weakness that we've seen in the last couple of weeks is weighing on the junior mining sector. Okay, it's weighing on a lot of different juniors. It's weighing on some juniors in my portfolio. There's a big difference in terms of investor sentiment at $5 copper as opposed to $4, $4.25 copper. It's night and day, right? There's some projects that just aren't going to work probably at $4 a pound, or they're not going to work well enough for investors to really be that interested. At $5 a pound, they might look great. Certainly above $5 a pound, they might look fantastic, right? So there's a big difference in investor sentiment and speculative fund flows. And so we've seen some air come out of copper here in the last few weeks, and that's definitely um, helped to keep this junior mining sector as subdued as it is. So, I want to stick with the key investment things. I don't want to make things complicated. I want to stick with gold. I want to stick with energy, namely oil services. Why oil services specifically in the energy sector? Well, because these are typically cyclical companies, right? So they get a relatively low valuation multiple. Halliburton might be 12, 13 times earnings. Schlumberger might be 12, 13 times earnings, right? And these are companies that when times are good, they can grow earnings 20% a year, 25% a year when the sector is really pumping, right? So under a Trump 2.0 presidency, he's going to drill, baby, drill. And so that is nirvana for Schlumberger and Halliburton and, the energy sector in the US more broadly. The oil price might not actually do that well under Trump 2.0 because he might bring out so much, new supply. That remains to be seen. And oil is a global market. There's a lot of factors involved, so we can't forecast it just based upon who the U.S. president is. Um, but even at $70 a barrel, $75 a barrel, West Texas crude, um, Halliburton could have, you know, record earnings, quite frankly. All right. So that's why I like energy. I think volatility is now here to stay, right? So if you're a trader, I think the environment's going to get better for you over the coming months, right? I think we're going to see volatility in foreign exchange. I think we're going to continue to see volatility in commodities, in precious metals, and in equities. I think volatility is here to stay. So that might mean it's better to have a higher cash holding in your portfolio to give you more flexibility and more ability to trade, right? So raise the cash a little bit, I think is probably a good theme. And then critical metal miners in the US. So we want to stay in the US. So Trump will make permitting easier. If we're going to have a trade war with China, well, we need to develop our own resources. We need to build our own mines, right? We cannot have a road in Alaska stalled by the federal government. We need to build it. The road to the mine. So I'm talking about TMQ. specifically. I mentioned this last week. It jumped up right after that video, the day after, and it's consolidating, right? Um, I think I mean, look, this project is big enough, the resource is large enough that this stock could be $2 or $3 a share if they had clarity, if they had visibility to a permit to build that road. Um, so I don't think it's a sell or take profits here at all. It's just gotten started, right? So that's a trade, and then ASCU, okay, copper in Arizona, right? And then Talon Metals is nickel and copper in Minnesota. I'm not going to go into Talon because the share structure is a disaster. Great deposit, terrible share structure. Company burns through cash at a very high rate, but it's one of the only games in town for nickel in the US. So if they can clean up their share structure, if they can clean up some things with that company, um, I think the Tamarack deposit is the real deal. The problem is everything else with the company, right? So I'm not going to highlight that. I'm not going to recommend it. I'm just going to mention it. But here we are, ASCU on the TSX, right? So this is copper in Arizona, copper porphyry in Arizona. Just going to go the high level things here. 140 million market cap, pretty tight share structure. So this is a company that's been around a few years, still only about 100 million shares out. So good preservation of the share structure, capital preservation, stewardship by this management team, debt free. They got 15 million in cash, 15 million US in cash with 140 million Canadian market cap. So, you can do the enterprise value math there. It's about 100 million, US, or maybe a little less even. The Cactus Project. And just look at this. PA by year end, metallurgy, more drilling. They have a partnership with Newton of, Rio Tinto. Um, and then next year, pre-feasibility study, complete permitting, construction decision, project finance. So these are some big milestones. Like, they're not messing around. Like, the next 18 months, this company's going to bang out some very big milestones. So you're going to either have sort of a make or break it here in the next 18 months at Cactus. Now, I'm not going to go into all this stuff because it would take another hour, but basically, they put out an updated resource last week, and it shows 11 billion pounds of copper in all categories, with 7.3 billion in measured and indicated. That's very good. Above 10 billion pounds of copper in resource in Arizona is tier one in my mind, okay, in terms of copper. So they've grown the deposit size substantially. I'm not going to go into the location advantage, but they're basically right near a highway with a town nearby in Arizona. They say they have social license. Let's see on that. Okay, I'm going to put a question mark. I'm just going to take their word for that. Are the locals going to let them build this? Let's see. Okay. And you can see the map here. Like, just look at the location. Phoenix is 77. I mean, it's basically 50 miles from Phoenix. It's basically less than an hour drive from Phoenix. Um, wow, pretty good location, in my mind. Permitting timeline and just so valuation. So, think about 11 billion pounds of copper, and let's say it's 100 million, enterprise value. They're basically valuing their copper at a penny per pound. That's pretty low. That's pretty low, right? So clearly the market is not sold on this, deposit, this mine getting built. The PEA is going to be absolutely critical to de-risk this, right? That's going to be a very critical milestone. what's the level of this PEA? Is it a real PEA, or is it, a fudgy PEA where they're just doing it for marketing purposes? So that's going to be very important. But based upon what I know about this management team and what they've shown me to date, this is going to be a legitimate PEA, and the numbers are going to be very important. Um, they're using 390 as their long-term copper price. That's good. That's conservative in my estimation. I would be plugging in, just for my own purposes, I'd be plugging in $5 a pound copper. But basically, their relatively low valuation, 0.25 times NAV, lowest among this peer group of 5 companies that they put up here. Um, and yeah, I mean, I think this is an attractive stock, and it's also a good way to play a Trump 2.0 theme. And even if Trump doesn't win, forget it. I mean, it's not priced for great news. It's not priced at any premium valuation. I mean, you could price their copper at 3 cents or 4 cents a pound, and it would be close to fair value in my estimation. So this is a deep discount. Um, and maybe there's some reason for that I'm just not aware of, right? So I'm highlighting, this one because the resource that they put out really caught my attention, and their presentation caught my attention. At this point in time, I do not own it though. That could change, right? That could change. I'm highlighting an idea that I have that's relatively new to my radar. It's not completely new. Obviously, I've known about this company, but I haven't done a deep dive into it to date, right? So I need to do a deep dive into Cactus, but I'm just putting it on your radar because it checks a lot of boxes just straight off the bat at first blush. And copper in Arizona is definitely in my wheelhouse, and I think this would be a great way to play Trump 2.0. Why don't I have the True Leaf chart up here? Okay, almost forgot to mention this. All right, so I bought this morning. I bought True Leaf. Why did I buy True Leaf? Well, Kamala Harris, legalization of marijuana. I think Trump will, do the same. I don't think it really matters there. So I think we got pretty much a lock that we're going to have some positive progress on legislation for the marijuana sector, within the next 12 months. And True Leaf is one of the keystone ways to play the U.S. marijuana sector. Okay, I'm just going to keep it that simple. And the chart is constructive. I mean, if we can get a close above 1470, I could see this stock trading up to $17 or $18 over the coming weeks. So I'm long True Leaf with a stop under these lows around 1250 a share on the CSE, TRUL on the CSE. All right. Junior mining seasonality. So go on my Substack. Where is it? Here. Junior mining explained. So 17th of July. I made this little graphic, partially in jest, partially out of humor, but partially out of truth, right? I don't think this is wrong. Maybe a bit of a generalization, maybe a bit exaggerated, but we are in the summer doldrums. Ask anybody in the junior mining sector, ask any trader or CEO, we're in the summer doldrums. But what's around the corner? Well, August is usually a good month for the sector. One of the reasons why August is usually a good month for the sector is companies put out their best news because they've been drilling sometimes since May, sometimes since June, but they've been drilling for a few months, 2 to 3 months. And so they put their best assays out first. That's the tendency. That's just the truth. Um, and money starts to flow back into the sector. Like good news brings money back into the sector, chasing the best, new discoveries, the hottest stocks, right? And so it can sometimes cause a bit of a rising tide. across the sector. And then there's also a bit of optimism that people are going to come back to their desks following Labor Day in September, yada, yada, yada. And then it's a bit of an exaggeration, but not completely wrong, that tax loss selling starts at some point in September and then continues until the final 2 weeks of the year. And then we get a Santa rally at the very end of the year, but tax loss selling throughout October, November, right? So anyway, just a little bit, in jest, a little funny, humorous post. But I don't see any reason for that seasonality to not hold up this year. We've had the last few weeks have been major summer doldrums. It's been very sleepy. Volume is anemic. Um, yeah, we should receive a lot of drill results in the next 6 weeks across the sector. There's been a lot of drill programs ongoing. The companies that I follow closely. That's not a secret. I think we'll get a lot of news, right? And hopefully some of it will be very good. Okay. I cannot predict it, right? I cannot tell you which companies are going to put out the best results, but I think we're going to have some good results coming out here in August. Um, and based upon how weak sentiment is in the sector and how sleepy it's been, I expect some higher energy, some more enthusiasm to be injected in the sector throughout August and into September. And then you also have conferences in September. You have Beaver Creek in September. You have the MIF in Vancouver later in September, right? So you start to get a little energy flowing back into the sector. Um, yeah, yeah. Look at that. I should just trade based upon how I call it at the beginning of the video. I should have my phone out and buy the E-mini at 55.85 when I start the video and say I'm not bearish. Let's see. Oh, gold is hanging in there. Okay. Let's update Cam. So the final topic. Okay, we talked about ASCU, Cactus Project in Arizona. Now we're going to talk porphyry projects in BC and the Yukon. So I'm a sucker for porphyry projects, right? That's well established. And before I get started, please subscribe to my Substack, follow me on YouTube, listen to the interview with Nate Smith, hear why he is essentially solely focused on copper porphyries and why he likes American Eagle Gold, one of my largest holdings, stock I'm very bullish on. Also hear him talk about one of his biggest wins in philo mining, which is like almost a 3 point some billion-dollar market cap now. It's one of the biggest companies in the mining sector, definitely the biggest junior, I think. And then one of his biggest losses, and just sort of what got him involved, and would he do it again? It was a good conversation. So check that out. But Cascadia, Cam on the venture. So to be clear, I traded this back in May off their initial news of these holes at the Cactus Project in the Yukon. I hit it pretty well. I forget exactly what my entry and exit were, but I think I bought around 25, 26 cents and I sold it about 40 cents. And I just watched it for a bit. They closed the financing. They started another drill program in a different project, the PIL Property in BC. And then this morning I saw the news come out. Okay. And guess what? I bought it at 25 and 26 cents again. So I literally, the same price I bought in May, I was able to get back in at this morning. So why did I buy it? Why did I get back in? Why is it down 32%? Um, let me see if I can try to answer that. So first, why is it down? Let's see the news release. Okay. So the reason why I believe it's down 32% is the market is disappointed about two things. This hole 7 was not very high grade. All right. So the farthest north step out was not very high grade. So hole 7 was the entire hole, 578 meters, was 0.1% copper. Okay, and um, yeah, there's a higher grade portion at the bottom of the hole that ran 0.22% copper, so 0.25% copper equivalent. But this is not economic, right? So hole 7 is not economic. So that's the first reason why they sold this off, right? There was some optimism that stepping out north would maybe get closer to a potassic core. And then the second reason is hole 6, which is the one that everybody was waiting on with bated breath. Well, hole 6 had a nice interval, 106 meters of a little over 0.5% copper equivalent, 0.37% copper, 0.22 grams per ton gold. But look, the grade got much lower towards the bottom of the hole. So the grade dropped off at the bottom. Okay. So that is, I believe, why they sold the stock off. They don't think that the grade runs to depth. Maybe this potassic section is pretty limited in scale and it's cut off to the north. Okay. I believe that's the interpretation um, of why the market is disappointed this morning. So why did I buy it? Why did I buy it? Well, I bought it because this is still just 7, 8 holes into a completely new target, a completely undrilled project, 8 holes into it, right? So you usually don't hit the mother lode on the first 8 holes. And the CEO quote from Graham Downs says, that phase 2 exploration is now underway to drill step out holes further to the southeast towards the higher temperature, alteration, potentially the potassic core. New grassroots porphyry discoveries in North America are very rare, and that's true, and typically take dozens of holes to vector towards the core of the system. We've just caught the tip of the iceberg at Catch and look forward to continuing to unlock this district scale porphyry opportunity. And he is spot on, okay? And by the way, I'm going to get him on the phone tomorrow. Probably going to do an interview that will either be on X or you'll find on my YouTube channel. I'll keep you updated on that. But the the grade, the grades of the first 8 holes are vectoring to the southeast. Okay. And the system is open to the southeast. So you see they're expanding the drill program. They're drilling 3 more holes. Looks like 500, the holes will be about 500 meters deep, maybe a little bit deeper if they're liking, what they see, but they're just going to step out maybe 130 meters or 150 meters, at a time to the southeast. And here's their 3 plotted holes. And I like this one testing some of the area, the higher grade zone that they hit in hole 6 from a different angle and testing the dischargeability anomaly in a different area. Okay, I think that's a great follow-up hole. And then I think continuing to step away from it. Also notice these 2 dotted lines here. So they're doing a phase 2, IP survey. So the IP survey, based upon what I see in their deck, um, and the amount of coverage that this phase 1 IP did, I don't think it was very deep, and I'm not sure how powerful it was. It looks like it only went down to about 500 meters, right? It didn't go 800, 900 meters deep. And I think based upon what they're seeing in drilling to date, they need to do a more powerful, deeper IP survey to really see this entire area. Okay, based upon the drilling to date, I think that they haven't actually hit the ore shell, or they've just grazed it. uh, based upon my understanding. And it will be this area that says future drill target here that'll be very interesting. And so I like the fact that they're doing they're doing more IP lines over here. And I want to ask them about this IP survey and how deep, it's going to go. But also sometimes, and every porphyry is different, the chargeability levels are different, but sometimes it's actually the moderate chargeability, not the high charge, where you have the ore shell, you have the like the sweet spot of the system. So I like these follow-up holes. I think they're going to get a lot of information from these 3 follow-up holes. I don't think the fact that hole 7 didn't really hit and hole 6, uh, at the bottom of the hole, it didn't really run grade. I don't think that's a deal killer, but I understand the market's response because there were people who were betting that hole 6 was going to be a boomer. And although it's a solid intercept, it's a respectable intercept, it's not a boomer. It's not a banger hole, right? A banger hole would be 400 meters of this grade. Okay. The grade that they hit over 106 meters, we'll do that over 400 meters. Now we've got a freaking banger. Or get these grades higher, get the copper grade up above 0.5%, right? And keep the gold at 0.22 grams. Now we're talking, right? But I believe they hit a portion of the potassic zone in hole 6, right? So they're getting warmer. They've got more information now. Um, this looks beautiful. I mean, look at all that veining in there. It's visible chalcopyrite, right? So let's get more of this stuff. Right? Let's get more of this stuff. Um, so that's number one. That's number one why I brought it. I still like Cash. I don't think it's a dead project. May have disappointed some people here this morning, but I don't think it's a dead project. And second reason why I bought it, well, they have another project in BC. They're also drilling, right? So they have like almost 4 million in working capital. This market cap is actually less now because they're down 32% today. So their market cap's about 14 million with 4 million in working capital. So basically, by buying it at 25 cents a share, I am buying it at almost a shell valuation. I mean, some people will argue with 10 million, enterprise value is not a shell valuation. It'd be more like 3 million, but I would say 10 million valuation is giving a company credit for next to nothing. Companies with some projects with a little bit of marketing and a CEO can easily get a $10 million valuation, even in a shit market, right? So it's not giving them credit for anything. It's not. I like their project portfolio. I like the copper gold porphyry theme in BC and Yukon. I know these trends very well. Um, and their PIL property is certainly very interesting and very exciting. So they're in a great neighborhood. You can see all the companies around them, all the projects around. You have, Thesis Gold, the Lawyers Project is next door, right? Skeena has a project nearby. I'm not going to go into all that. I'm just going to show you this, right? So they're drilling right now. Um, where's the news release? So they're drilling 2,000-meter drill program, 2 to 3 holes. So they're going to drill deep holes. They're going to drill like 600-meter holes or 700-meter holes. And they're testing this chargeability target, very strong anomaly, right under surface samples of 3.89% copper with 173 grams per ton gold and 119 ppm moly and outcrop. There's a few other things, but here it is. Here they're going to drill this area. You need to look at the chargeability here, but basically it makes sense that this fits the porphyry, signature where you have the pyrite shell, right? So when it's like 10% sulfides, really strong pyrite, you could get chargeability values up to 60 or 70. And that's what they have here, right? And then the more moderate charge will be around 30. It could even be down to 20. And that's your potassic core, right? That's where all your copper sulfides are, right? So you want chalcopyrite and hopefully some bornite or chalcocite, but you want that chalcopyrite uh, dense core where you get like, 2 to 3% chalcopyrite in the core. Um, but this just fits this slide, right? This slide fits based upon the company's current valuation, market cap, cash position, quality of management, project portfolio, and the number of swings I get at the ball here to hit a home run. I like this setup. I've got more than one way to win here at PIL and catch. I got 3 more holes at catch. I got 2 to 3 more holes at PIL just this season that they're fully funded for. We're going to get more IP done at catch in August. A lot of different potential catalysts here from what I view to be a very attractive valuation, right? So I'm not gonna pitch it any harder. I'm just explaining why I bought the stock today, right? Um, and this is the risk that we take in junior mining. Whenever a market's moved from 20 cents to 50 cents on visuals and what could be, what could be, you have the risk of mean reversion where it makes a round trip, right? And basically, I would say that you know Cam made the round trip. It opened at 23 cents on that morning in May. It traded as low as 24 and a half today. So there's the round trip, but uh, I think 23, 24, 25 cents it's pretty cheap for the quality of projects that this company has and the potential to make a discovery of significance. So there we go. I've talked a lot about American Eagle. I talked about Hercules the last couple weeks at least. There's nothing new from either company, but that could change. Also, core assets, they've been drilling. Probably going to hear from them soon. Which other ones are missing? Ridgeline is about to do the IP at Big Blue, like any day now. Okay, I think it's going to be done by the end of the month. So probably get some news from Ridgeline in August too, and hopefully the IP looks good. All right. Yeah, I'll just leave it at that. Thanks for watching, guys. I really appreciate your viewership, your attention, your time. I don't take it lightly. I hope it's worth it for you, and have a powerful trading week.